Aloha folks, welcome to another video. My name is Mark, Mr. Dividend Investor. In this video, I'm going to talk about three companies that if you invest in just in these three companies, you will create a dividend income that you can get dividend payments from January to December. As always, please remember that this is not a financial advice. This is just me sharing. So if you are just wanting to start your dividend portfolio, might be a video that you definitely want to watch. With that said, if you are new to the channel, just wanted to say welcome. Don't forget to hit that subscribe button, hit that notification bell so you don't miss out on some of the videos that I put out. With that said, let's take a look at these companies. First on the list, everybody knows this company, solid company, iconic company. McDonald's ticker symbol is MCD. This is a company that engages in the operation and financing of restaurants. So McDonald's is a staple. Everybody goes to McDonald's. Everybody has tried McDonald's at some point in your life. I definitely like this company. Love their dividends. Love their company. So great fries too, by the way. Now let's take a look at tip ranks. Based on tip ranks, at the time of this video, it was 235 with a price target of 258 with a 9% upside. Now the high price target is in the high is 283, average is 258, and the low is 225. Now their rating is as a strong buy based on 24 analysis. 23 of them said it's a buy, 3 of them says it's hold, nobody says it's a sell. Now looking at CNN Business, just to get a comparison, you can see the high of 283, the medium of 260, and the low of 225 with the analysis recommendation of 23 buys, 1 outperform, and 8 holds. Yeah. Now looking at Simply Safe Dividend, based on their dividend safety score, they rated as safe, which is 77. Now looking at the dividend yield is 2.19, market cap is about 176. Now going down further to the key metrics, you can see payout ratio is about 78%. Now recession dividend has increased during the 07 and 09. Now looking closely at the dividend growth, the last 5 years it was up 8% per year, which is fast. Now the last 20 years it's up 17%, which is very fast. So if you were one of those people that invested in McDonald's 20 years ago, you have been up 17% per year. So kudos to you. Now looking down to the dividend growth streak, look at this amazing stuff. 46 years of consecutive increases. More importantly, uninterrupted dividend streak of 46 years without a reduction. So wow. So I love this company. Solid company. Now the payout schedule frequently would be you'll get quarterly in the months of March, June, September, and December. The annual payout would be $5.16 per share. Now, I want you to pay attention on the payout schedule for these companies. As you go through each one of these companies, you will see that you will get paid from January to December based on their quarterly schedule. Now, moving along to bar chart, based on their price target is at 283. The mean is 252 and the low is 225 with the analysis rating of a strong buy based on 23 analysis. Looking down further, you can see it's been a strong buy the past 3 months. Now breaking it down, currently you got 6 holds, 16 strong buy, and then 1 moderate buy. So I love the fact that there's more than one. So you can see consensus wise, they say about 16 strong buys. Now looking at Yahoo Finance, you can see based on their score, you can see the payout ratio is about 34 with the looking down to the earnings, you can see it's been 2 beats and 2 misses. Now annually, you can see on the 2020, the revenue is 19 billion. Earnings is 4 billion. Now looking down further to the recommended trends, you can see it's been a mixture of holds and buys and strong buys. Their rating right now is a buy. and then their price target is below the average, so it's about 235. The average about 258. So in my opinion, it still is a buy. Still is lower than the average, so pretty solid buy in my opinion. Now looking at Google, you can see now the 5-year up 90%, 1 year it's up 27%, year to date is up 12%. So 6 months it's up 10%, and then a month it's just down negative 0.53, and then the PE ratio is about 34. So that is for McDonald's. Second on the list is Medtronic. Ticker symbol is MDT. This is a medical technology company, engages in distribution and sale of device-based medical therapies and services. Now, if we look at tip ranks, based on tip ranks at the time of this video, it was 128. Their price target is 142 with 11% upside. Now, looking at the price target is in the high of 153, the average of 142, and the low of 130. Now, their rating is a strong buy based on 19 analysis. 17 of them said it's a buy. 2 of them says it's a hold. Now, looking at CNN Business, you can see forecast is in the high of 153, the medium of 140, and then the low of 129, with the analysis recommendations of 21 buy, 4 outperforms, and 5 holds. Now, let's take a look at Simply Safe Dividend. Based on their dividend safety score, they rate it as 99, which is very safe. Their dividend yield is 1.97. Market cap is 172 billion. Now going down to the key metrics, you can see the payout ratio is about 52%. They haven't increased their dividends during a recession on 07 to 09. Dividend growth, look at this, the last 5 years, up 9% per year. Now, last 20 years, it's up 13% per year, which is very fast. So again, if you were one of those guys that invested on this 20 years ago, you were up 13% per year. Now, here's the thing that I really like. For 43 years, they have increased their dividend. Now, it's been uninterrupted dividend streak of 43 years without a reduction. So solid years of continuing to increase that dividend and paying the dividends. Now, payout schedule quarterly in the months of January, April, July, and October, with the annual payout of $2.52 per share. Now, if we look at Yahoo Finance, you can see top institutional holdings for this company is Vanguard. You can see how many shares and the value. You can see BlackRock, State Street. So a lot of solid companies, Bank of America, JP Morgan, T. Rowe Price. But I usually look at these ones, Vanguard and BlackRock. So these are the solid ones. Now, if we look at Google, you can see the past 5 years up 45%. Last year was up 38. Year to date is up 10. 6 months up 8%, and then the month is up 3%. PE ratio is about 49. So last on the list, aosmith, ticker symbol AOS. This is a company that manufactures residential and commercial gas and electric water heaters. Another company that I definitely like, that if you definitely want to take a look at. Now, looking at tip ranks, as you can see at the time of this video, it's at 70 with a price target of 68. Now, the high price target is 85, the average is 68, and the low of 45, with a consensus of hold based on 5. You got 1 sell, 1 buy, and 3 hold. Now, looking at Simply Safe Dividend, you can see a dividend safety score of 99, which is very safe. Dividend yield is 1.47. Market cap is 11 billion. Going down further, you can see payout ratio is 41%. Now, the last 5 years, you can see up 21%, which is very fast. Last 10 years is up 22%, which is very fast. Now, looking down, you can see dividend growth streak of 27 years of consecutive and uninterrupted for 27 years. Now, if your payout schedule, again, the quarterly is February, May, August, and November with the annual payout of $1.04. Now, looking at CNN Business, you can see the high is 85, the medium is 74, and the low of 45, with the analysis recommendations of 4 buy and 10 hold. Now, looking at bar chart, you can see it is a moderate buy based on 12 analysis. Currently, right now, you have 9 holds and 3 strong buys. Now, same thing with Google. You can see for the past 5 years, it's up 55%, 45% the past year. Year to date is 31%, 24% the past 6 years. 6 months, and then 1 month is up 2%. So, guys, there you have it. These are 3 companies that, if you want to start your dividend portfolio, you can start with this. There are other videos also that you can also check out to begin your dividend portfolio. So you can see, check out the other videos also with the same, like right here, dividend stuff. Definitely want to check those out. Again, thank you so much for watching. Hope you like this video. Please definitely give it a thumbs up. If you're not yet a subscriber, you definitely must subscribe. Hit that notification bell as well. As always, please remember, again, this is not a financial advice. Again, thank you so much for watching, guys. I really do appreciate. Always thank you so much for all your support. Please be safe out there. Stay cool, keep investing, guys, and I'll catch you guys in the next video, all right? Take care. Aloha.